Well, good morning, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is July 7th. We're back from the 4th of July, Independence Day holiday week. We had a fragmented week last week, but this week is a full week. We've got a lot of info, a lot of goodies on the table. As I always say, let's get into it right now. I want to show you some momentum levels that look a little disturbing on the NASDAQ in light of the fact that it made all-time highs last night. So let's talk about global economy. And then let me talk to you about the NASDAQ after that. Now, world stock market was lower Tuesday. Global markets, as spreading COVID-19 outbreaks dimmed hopes for the global recovery, despite an overnight rally in tech shares that pushed the NASDAQ to another record high. I'm very, very worried about that, and I'll explain to you why. Europe's executive, meanwhile, lowered its forecast for economic growth this year and predicted a slower rebound in 2021. That's not pretty. Highlighted how the recovery for the global recession and the lockdown on businesses will take longer than expected. I heard word yesterday that they're expecting up to 85% of small businesses to not reopen if this COVID-19 continues in the States for the next few months. Can you imagine the devastation that would have to the economy? Can you imagine how many small business owners, restaurant owners, very, very devastating. So again, don't get too over bullish just yet. This COVID-19 may be here for a while. Market sentiment, well, it took a hit after the executive body of the 27-nation EU said the bloc's economy is forecast to contract 8.3% this year, before growing 5.8% in 2021. In previous forecasts released in May, GDP was forecast to contract 7.5% and to bounce back 6%. And remember, these revisions are taking into account what happened in February and March. So they are revised figures. So even if they look better than you're expecting them to look, keep in mind they have been revised lower to death. Industrial production in Germany rebounded in May, very positive, but less than expected, and remains far below levels from before the pandemic. And again, we're only comparing these revised numbers from what we're expecting post-pandemic. So if you look at the numbers that were expected prior to the pandemic, you will be shocked how much lower they are right now. Worst case scenario for markets is that governments resume more widespread lockdown implementation during the spring and choke off the budding economic recovery. That wouldn't be pretty. On a brighter note, the crude oil market seems to be holding up around $40 a barrel. That $40 price is very important, as I explained over the last few days, because it's going to stop the bleeding. Why? Because U.S. markets, U.S. refineries, U.S. producers, U.S. Large oil companies like ExxonMobil, they their purchase price for a barrel of crude is around $40 a barrel, give or take. It's between 39 and 42, so right around 40. So when the price of crude oil goes up to a certain point, they stop bleeding because they don't have to go into a debit every time they want to buy oil. Keep that in mind. Now, I want to show you something very serious. This is the NASDAQ 100. This is what happened prior. Let me put on one of the indicators that I want to take a look at and make this a little smaller. I want to show you this because this is important. First, I want to make the chart a little small. Then I want to get rid of this indicator that we absolutely do not need. And then I want to add the 10-day RSI. Here we go. 10-day. Now, look very, very carefully. Look very, very carefully. See higher highs? You see higher highs? This is before February. I want to keep showing this to you because you're not going to be able to escape this. Divergence. Look at this. And I'll go through it in a second. I just want to draw my trend lines. My inner Michelangelo art creativity is coming out. I'm just giving you a hard time. I can't draw it to save my life. All right, this is the RSI oscillator right here. Notice the highs are going lower, highs are going higher. This is classic divergence. Notice highs are going higher, and notice momentum levels are going lower. It's exactly what we were seeing prior to the February downside. Divergence, divergence. Higher highs on price, lower price on the indicator. The momentum levels cannot sustain these levels as they go higher. This is very, very important. Again, lower highs on the momentum oscillator, higher highs on price action. And look at what happens. Typically, when momentum levels can't sustain higher prices, the market cools off. Now, in addition to that, and this is exactly the same scenario that we were seeing. I'm going to take a picture of this and hold on to it for a day so I could show you exactly what I was talking about when that moment happens. Now, look at momentum levels. This is monthly momentum levels. This is the NASDAQ 100. Pay attention. This is the same thing as this, except we're looking at it internally. Look at here. I'm going to add a little drawing tool here just to give you a little understanding. You see this little circle here? We are breaking down, but momentum levels are still around 88, 89%. Now, we went almost to 100%. Now, show me one time over the last 15, 20 years. This is a monthly chart. This is going back to 2008, all right? So this is going back 12 years. Show me one time momentum levels went above this red line or in this red area right here that we did not go all the way down. Went in here, went all the way down. Went in here, went all the way down. Went in here. Took a little while, but we still went to the 40th percentile. Have we gone here yet? No. We got to go here. Look at this. Every time. There's not one time in the last 15 years or whatever the time period is that momentum levels went to this level here that did not cool off at least to the 50th percentile. Now, we went to the highest level in 12 years, probably the highest level ever here, and we're still holding on. Do you think it's going to hold on forever? No. It's going to break down, and it's going to break down and probably take us all the way to the 20th level. Just like it did here, broke down to the lowest level and took us to the highest level. Now we're at the highest level. We're going to huff, we're going to puff, and then we're going to come down. Why? Because it happens every time. Because that rubber band can't be this stretched out. So again, what you're seeing right now in the NASDAQ 100 is exactly what we saw in the NASDAQ 100 in February. As a matter of fact, the momentum levels that we saw in February were the highest levels. Let me show you 1 year momentum levels. We drew this. All right. Look where we were. Look where we were in February of 2020. We went all the way up here. And I said, once we go up here, we're going to come down. And we did. We stayed around here. We crashed. And then after the crash, we came back up. And now we're staying here again. But now we're even higher. We went to the highest level. We went to 98%. And now we're cooling off. So if you look at the long-term period, we were here. We crashed. And now we're all the way up here. And folks, it's not going to sustain itself. Mark my words. Now, I want to show you some earnings that are coming up within the next 7 days to watch, because earnings are about to take center stage and earnings aren't looking that pretty. So today, let's look at the big numbers. I'm going to look at volume. That'll tell us if a stock is big. We've got Levi's reporting today. We've got JCPenney. Ouch. Painful. Paychecks. We've got, let's see, another big one. Simple Good Food Company. We got Bed Bath & Beyond, which actually is looking really good. We got Walgreens Boot Alliance today. So we got some retailers. We got Delta coming out on the 9th. So between today is Tuesday and Thursday, we've got a couple of stocks coming out. Let's see Friday, if we got anything good. We got Citigroup on Friday. We got Wells Fargo. So banks are coming out on Friday. Until then, we've got some retailers. Keep your eye on the momentum levels. And again, this stretched out rubber band, it can't stay at these levels, folks. I know what you're thinking, Roger, but how long? I'm telling you, look at what happened here. And again, same thing. Momentum going higher, breaks down. RSI can't sustain itself. Momentum going higher, RSI cannot sustain itself. What does that mean? Very much that we can have another February downfall, especially with momentum levels on the NASDAQ reaching all the way up there. That's a stretched out market, folks. We are in an extremely stretched out market. I want you guys to know that. And if you're not hearing that info from others, I need to tell you that the market is stretched out and that rubber band is going to snap. And we're just getting into earnings, a couple of negative news, and I could see that vulnerability starting. So be very, very careful with the market right now. We are at a very crucial turning point. It may take another month or so to happen, possibly, but I think it'll happen sooner. But the market is going to turn, and that rubber band is going to snap the other way, much like it did in February. Maybe not as much, but we're going to see a nice little correction. Now, I've got something for you. In today's economy, everyone can use some extra cash. I mean, did you just hear the numbers I came up with? I mean, our revisions are terrible. We're still in the worst economy, or coming out of the worst economy since the 1930s. Now, how would you like to make $3,852 or more every week right now in this crazy market cycle with this rubber band momentum level stretched out? I would. If so, then I've got a secret to share with you. There's a new strategy, and it attracts hot stocks that could potentially predict exactly where they're headed, down to a penny. How would you like me to tell you right now, hey, the NASDAQ is going to go up here. The NASDAQ is going to go down here, down to a penny. That's scary accurate. That's really, really accurate. Now, you could use it to collect payments like $1,056, $1,913. How about $3,852 every single week? Don't hesitate. Folks, do not hesitate. Click on the link below to see how you can get your first payday. Do it now. Get the secret now. This is the coolest thing ever. $3,852 on a weekly basis, knowing exactly where stocks are going to go down to a penny or up to a penny. In this economy, you've got to get in on something like that. You really, really do. Click on this link below to see how you could get your first payday. Do it now. Don't procrastinate and don't delay. Do it for yourself and do it for your family. And I will talk to you guys tomorrow. Bye.